You're listening to the greatest multifamily investment advice show. My name is Adam Ross, and now I'm talking everything multifamily for an in-depth conversation, and I will be diving deep into raising capital, deals, and underwriting process. We have a great guest whose career is more than 2 years between real estate investing, buying deals, property management, raising capital, and all sort of fun. Hi, Mike. How are you doing?
Mohammed, how are you? Nice to see you, and thanks for letting me be part of your show. Very excited to be here, so thank you.
Thanks a lot. Before we start this, I was checking my career. You have done so much, and I want to make sure we get it right. So, my background is super impressive, and we want to get to talk about your background and real estate. I think the audience is going to love this, so let's begin.
Sounds great. Thank you.
So, walk us through your background and what was the motivation to say, I want to start learning about real estate? Or because you've been working, I think, 20 years?
Hmm.
So, why?
Yep.
Why real estate?
Yeah. No. Great question. Thank you for letting me be part of the show and everything. And my journey kind of started probably similar to what a lot of people got started. Is I started working at a company, and I was in a higher management position. But for me, I was traveling a lot, about 2.5 to 3 weeks out of every single month, and it started kind of take a little bit of a toll on myself, and I wasn't normally super happy with the job that I was doing. And secondly, it's just like I said, it was just really something that I wasn't really happy with. The real big aspect when it came to the real estate side of things was I wasn't really happy with a lot of the returns I was getting from conventional stocks and mutual funds in my portfolio. And I'm sure this can relate to a lot of people, and this is not a shot, try to knock on the industry whatsoever. It's just, for me, it wasn't the right fit. And I bought my property and a home for myself, and I just realized how much it appreciated in such a short period of time compared to my mutual funds and stocks. And I'm like, I should probably do more real estate than I should do a little bit of this. And that's where the moment became in my brain, I got to figure out a way to kind of do this. And so there wasn't a lot of information back then in like, there was no YouTube channels and Facebook group.
Correct.
There was none of that. There was nothing there. So I had to
100%.
kind of put my blinders in and just kind of try to feel out what to do. And so fortunately, I just got myself involved in a piece of real estate, and it was just a small little townhome in Edmonton, and I'm from Vancouver. And I was losing $40 a month on that property, and I was like, it's not a big deal. I'm not, whatever, right? It's not a big deal. And then
Correct.
I'm like, it's one meal a day that I just don't go out for lunch or whatever, right?
100%.
And then yeah, and then from there, I kind of with the market in Edmonton, when I purchased, it actually really took off, and the rents literally almost doubled within about a year and a half.
Wow.
So it turned that negative cash flowing property into a very
Positive.
good, strong cash flowing property. And I'm like, whoa, now the real understanding came in. I'm like, now if I can get a few more of those, now I can kind of the idea started to come in that more properties, more cash flow, more money in my pocket, more flexibility in my life. And that was kind of my initial aha moment.
When was
And
that?
oh boy, that was like 2001, somewhere in that
Wow.
vicinity.
Okay.
Yeah.
Okay.
And so that really kind of opened my eyes, and that kind of started my journey in this whole process.
Hmm.
But I had no intention of, building a real large company, or even being on this meeting with you today and all this stuff like that. It's just, I've just been honored to be able to share my journey with people over the
Thank you.
years, and learn from not only just the good things that happen with the real estate, but also some of the mistakes and stuff that comes along with it too. But for me, my journey really came back to freedom of time. And I think can resonate a lot with a lot of people. As I saw real estate as an opportunity. That was my aha moment when it came to real estate. And I'm like, if I can do more of this, I can get more freedom of my time and maybe turn this into a career. It took a long time to facilitate that, but I was very fortunate to be into that position today. And so, for me, my why was really more my family, and being able to take them to school and pick them up from school, and just, I can just stop what I'm doing. I'm not committed to a specific task or specific schedule in a calendar that I have to work from 8 to 5. My schedule is completely flexible to what I want. And so that's where my journey started. And it was just basic residential properties just to begin with. And it's like, It was just the path that I started to change and evolve as the years kind of
So
expanded, right? So
basically, uh, you want to change selling money, selling time for money to be more freedom. So rich dad, poor dad, correct?
pretty much Rich Dad Poor Dad. And it was the funny thing is I actually didn't read Rich Dad Poor Dad
So
back
far?
then, so I didn't know anything about it until
Yeah.
probably a few years later when there was a book really all about it, and that even just further expanded a lot of the thoughts that I had, right?
So after 20 years, how many units under your management now?
So we've got over 225 units across the country that we're
Wow.
managing today.
So tell us about your target market. So, or your criteria, or would you like
Hmm.
to invest? And basically, it's a buy and hold or better strategy or a
Hmm.
cap rate. So, what you looking for?
Kind of a combination of everything you just said, to be really honest with you. So it's, for us, we look at where the opportunity is, and for us, and to achieve our further expansion of our goals. And so I'm being recognized much more so in the multifamily space, and so I like kind of the burst strategy in the multifamily side, where increase valuation based on obviously cap rate and understanding what the cap rates are in the marketplace. So that is something that obviously one of the strategies that we look for, but at the same time, we are a buy and hold investment company. And we like to kind of create that burst strategy with our multifamilies and continue to hold it. But we're looking for the right markets to be investing in as well, that has that increase of economic development that's happening in the province. So for example, when we are investing in back east in Atlantic Canada, we saw obviously some significant appreciation out there. We saw a lot of migration, a lot of investment happening in that way. And so all of a sudden the cap rates, which were pushing it around 6.5%, 7%, now have dropped to about 5.5.
Correct.
So there was opportunities there. And so we saw that and we were kind of like, okay, this is a great location to invest in. And we can refinance it, we can sell the properties, and more importantly, pull some of that capital out to reinvest it again, but then also hold it as a long-term investment strategy. And so for me, I've always been a long-term kind of cash flow investing business. And I got a much more longer term approach to this. And so, what I look at is very similar to what I started earlier on in my career is, if I have the ability to generate a continuous stream of income from the properties, it just helps support the lifestyle that I want for myself, which is more flexibility and freedom. And so I like my career in real estate investing to be easy. No offense, it's just what it is. I don't like
Correct.
to. I'm not a big renovation guy where fix and flips. It's just not in my wheelhouse. I keep things really simple in my life. But what I do have a lot of visibility is to the numbers and making sure that any assets that we acquire are good assets, not just for the short term, but also for the long term as
So
well.
number one
So
is cash flow. This is the
I
first
need
lesson.
cash flow. Absolutely. For me, and it doesn't necessarily have to be cash flow immediately, but where we have the ability to increase that valuation to get the cash flow that we're striving for. So for us, in any asset that we acquire, I am looking for cash flow.
So
Absolutely.
what is
Yeah.
your magic number per unit for cash flow per month?
Uh, for cash flow, I don't have it as a per unit basis, to be
Hmm.
honest with you, Mohammed.
Hmm.
It does vary, and it does vary depending on the market that we're looking at. So kind of in a scenario, we would probably be looking at just kind of roughly, in the area of probably around $200, 215, two
Okay.
twenty per unit. But obviously more is better. But what I look at too is just what is the other opportunities that we can kind of facilitate as well. So even upon acquisition, if I bought a 15-unit apartment building that will loses money every single month, right now, it's what can I get it to? What are some of those things that I can do for renovations, increasing rents, reducing some of the expenses to increase the net
Hmm.
operating income to kind of get the cash flow that I want. So I might find a really good deal that has just been very poorly managed. And unfortunately, the cash flow is really bad because it's just been really badly run. But we can take it over,
And change.
change the tenant profile,
Correct.
look at better efficiencies in the property in itself, and just oversee and manage it much better.
Makes sense.
Do some renovations, obviously, as well, to get it to the level that we want where it can produce, right? But for me, if I'm buying an asset like that, I'm hoping that I've acquired it well, right? Not necessarily paying over asking price. So it's really, really important for those that are getting into the multifamily space is just the acquisition is an important piece. You need to understand you do need to buy well. You do.
Correct.
And then the second piece is what is the opportunity? And so be visible of what the future opportunity is in there to do well. So, but when the time comes when we have done the things that we need to do, we need that property to be generating income. And the way I look at multifamily is it's a business. You're buying and any piece of real estate, including single family home. And again, this is my belief, and it may vary depending on everybody else. A lot of people are more based on appreciation and all that stuff like that. But I've been a big believer that appreciation is speculation. You don't know if the markets are going to continue to go up or not. But the one thing that I've learned is as long as you've got cash flow, you're able to sustain any types of variances that happen within the economy. And so with that being said, when you're treating it as a business, you want that business to be profitable. And if I use the analogy is if I'm buying myself a coffee shop, okay, none of us, including yourself, I would assume, you would never buy a coffee shop that loses money every single month.
Doesn't make sense. You have
Doesn't
to
make
have
any
cash flow.
sense.
Yeah, you're not
Yeah.
gonna able to scale anyways. The idea is to scale,
No.
not to have just one building losing and you can carry the losses. The issue is you wanna have 10, 20, 100, and eventually, in your case, you wanna have a fund and an actual syndications and having not only 200 to scale it to 1,000. I think this is your goal anyway. Even if you didn't do it by yourself, it's gonna be your son and so on. Correct? So to scale
Absolutely.
it, always cash flow.
Yeah.
I believe on this, to be honest. Correct.
Yeah, like it's the way to do it. And the way to grow is, you use the terminology is don't buy alligators, which is taking money out of your pocket every single month. Because, we all got into this for a reason. All of us, we all have our own stories. Mine was about more flexibility and freedom of my time. But if my properties weren't able to perform, I'm now doubling my work. Now I'm not only just working a full-time job, I've now got to I'm using that full-time job to support my real estate investing as well,
Correct.
because I may be losing money. So understand when you're buying a property is, what was the objective of you getting into it in the first place? Why are you doing this? And then make sure that whatever asset you buy is helping fulfill that objective that you have for yourself. And so for me, it was about more flexibility and freedom in my time. And so the more income that I was able to produce and provide, then the more flexibility that I have in my life. And that was always been the game, right?
So right now, what is the order for the markets for you? Like Nova Scotia, New Brunswick, Saskatchewan, Alberta. What is the best market for you right now?
So our market of choice right now, we're putting a lot of emphasis in Calgary and in Edmonton. Those are both of the markets that we're putting a lot of attention to, just obviously with what's going on out there. I find that everything's kind of seeming to be in alignment, and I'm not here to tell people where to invest or whatever. So take your time to do your due diligence.
Correct.
And don't just base it on my opinion. I'm just sharing with what we're doing.
Correct.
I've been investing in Edmonton for decades now, to be honest with you. And I've been through the ups and downs of it. And so what we're finding right now is we're seeing a lot of migration starting to happen back in Alberta. I think the biggest thing is just affordability, because it's so much more affordable than most other provinces in the country. And it's not to say, Saskatchewan's not a more good market either. I think there's yet a market there as well because of affordability. And, for those that are investors, it's people are investing in that market as well because there's no really rent caps. There's no rent regulations. And sorry, I shouldn't say there's no rent regulations, but there's no capital caps in regards to how much I can raise rent. So it's definitely much more of a landlord friendly place. And so from an investment side. So again, with migration happening, that's good as renter. If we've got properties there, there's great as renters, but with the demand that's also happening as well, we're seeing a very low inventory as well for properties as well. So the demand is starting to go, and we're also seeing prices going up.
So I think the lesson here is you able to survive even in 2016 with the immigration from, I think, Edmonton, because you said that you've been dealing with Alberta on the last decade. So you remember what happened on 2016 when the oil prices and everyone was losing their jobs in Edmonton. But as you said, the main thing is cash flow. Even if there's a actual drastic change on the market, you can survive, correct?
Absolutely. And that was the key for us and our success in that time period is, part of it is buying right and buying well and being cognizant and paying close attention to what's happening in the market. There was some properties that we sold in 2015 because we actually 2015, 2016, we had so much equity in there and we saw that there was a downturn that was about upon us. And we just made the decision that some of them we wanted to make sure we protected a lot of the equity that we have. And we were very fortunate to take that equity out, sell some of our assets because the market did take a dip. And the other properties that we held, we weren't really too concerned with it because it was continuously generating cash flow. Exactly like you said, as long as you've got income coming in every single month, we can ride out pretty much anything that happens. And real estate is a very cyclical business. And so with that mindset, and as long as you've got a long-term approach to this thing, you're going to have ups, you're going to have downs, but cash flow is really kind of king. It just continues to support the business no matter what. Yes, we may not have the appreciation, but what you do have is you've got income every single month, and that mortgage is being paid down every single month. So you've got two out of the three major income opportunities that are there.
To be
And then when
honest,
we get,
I'm really annoyed with this kind of appreciation market because it's giving the wrong vibe to all of the investors. It thinks that it's gonna keep going and going and going. And if I bought this property now is 1 million, next year is gonna be 1.5, and so
yeah,
on. But it's
yeah,
not true. Eventually, it's gonna go down, and as you said, cash flow, cash flow, cash flow.
yeah, cash flow. And that's the thing, for us that are in Vancouver and for us that are in Toronto, and I talk to a lot of investors. They're just like, well, you know what? I don't want to invest. I like investing in Vancouver and Toronto because those are appreciating markets constantly.
Correct.
But that's just the perception that markets, when you buy real estate, it just appreciates. And unfortunately, you've got one or possibly two generations that truly believe when you buy real estate, it just does this in Vancouver and then also in Toronto. Prices just should naturally go 15 or 16% appreciation every single year. That's not normal. That's not a normal market that it appreciates. So, honestly, we've had a lot of, it'll be very interesting to see what happens this coming year because obviously, prices are much more expensive. We've got lots of inflation. There's new policies that are being put in from the federal government as well. Interest rates are going up. I think some of these hotbeds that we've had are probably not going to be as hot as they were in the past. Like, I look at the Lower Mainland in Vancouver, some of, third least affordable city in the world. It becomes really difficult because we're not seeing our incomes keeping up with the way prices are going up, right?
Correct.
So
So as
yeah.
I see, your business model relies on long distance management. So the first funny question would be, why not Vancouver? Like here, as you said, why not Ontario?
Hmm.
So why not Vancouver?
And it's not that I don't like Vancouver, and sometimes I'll kick myself. I'm like, you know what, I should have bought some more properties in Vancouver, but knowing what you know today. But like I said, kind of from the very beginning, I'm a cash flow investor, and that's always been my model is that income stream. And so for me, it just was not able to be accomplished here. There was just too much risk in regards to buying a property
Hmm.
and playing the speculation game. And so I didn't know what was going to happen with the market. I don't think anybody could really foresee the way the levels of prices have gone up in such a short period in all these years, right?
Correct.
To see properties, literally more than double in such a short stint is mind-boggling, to be honest, right? In like 15 years.
Correct.
But the one challenge that it always faced is it's just there was no cash flow. There really wasn't any cash flow out here. And so for me, if I was trying to create a cash flow investing business, that was kind of the main reasons why we never really invested in the Vancouver marketplace. It just didn't make sense. I wasn't so worried about needing to manage the property because I don't manage any of my properties. To be very, very clear, I don't like, the old saying, work on your business, not in it. I've very well taken that to heart, where I try to really not do the day-to-day stuff like painting of the units or property management or finding that's just not. I want to work on scaling and growing my business and not necessarily doing a lot of the
As you
hands-on
said,
stuff.
it's a business, not a second job. So if you're
It's
doing
exactly
it by
that.
yourself, then it's second job.
It is very much so. Yeah. And so, like for me, we always focused on markets that had that opportunity. We're looking for markets that are continuous linked, looking at economic growth, economic expansion, lots of migration, people moving in. And then more importantly is obviously for markets that generate income and cash flow, right? It's kind of a few prong approach to this, but again, we want to invest in markets that have a future, that have growth expansions and plans and stuff. But at the same time, if I'm buying a business in that market, I got to make sure the business is profitable. And so that
Correct.
is one of the main criterias that I always look at. It's always done well for me. And like I said, I would never change it any differently, to be honest with you.
Correct.
Yeah.
For me, the next question will be, I think is always for me is the core team. In
Mm,
multifamily, in my opinion, is your core team should be the property management company, your commercial realtor, and your mentor if you need, and if you're starting your journey basically. So
yeah.
because you're basically moving between markets, I think you already have boots on the ground in the last 10 years. But
Yep.
if you're going back to on time and remember, what was your initial process to hire a property management company? Especially that, as you said, you don't want to make it a second job. You want to scale your business. So,
Yeah. Well, I think when I first started many years ago, it was kind of anybody that was willing to take me because, in a lot of cases, property managers, the really good ones, they weren't really taking on any clients at all, right? And so that was really, really tough.
hmm,
And so you just kind of accepted kind of the one that was willing to take you, unfortunately. And that wasn't the right strategy. It's about being patient and trying to work that relationship with your property manager over time to hopefully accept you to work with you. But for me, when I started many years ago, again, it was I just picked a property manager based on kind of references from a couple people. I didn't have a very big network back then in regards to other investors and people I can talk to. It was kind of like, let's get old school here. Yellow Pages property management in Edmonton. It was pretty much to that level. And so you didn't necessarily know what you were going to get, and you would talk to them a little bit and you try to feel good about it. But um, when I look back then to where we're at today, for us, it's actually an interview process. And very much like we talked about from the very beginning, is this is your business. This is your real estate investing business. And as you said, property management is extremely important to make sure that your business is going to maintain success. And so my mental approach when it comes to property management is they're like an employee of yours, technically, right?
sure.
And just like any other business, you want to make sure you find the right fit for you. They have a common vision of what your investment goals are, able to help accomplish those investment goals for you. So it's an interview process, and it's just understanding kind of their experience, their knowledge. How do they deal with evictions? How do they deal with rent collections? What are some of the back end systems in regards to reporting financials? Do they have a team of individuals that work for them? Are they licensed property managers?
Correct.
Right, that's the
Yeah.
other one.
Yeah.
Are they allowed to be doing property management? Are they able to collect rents and all those things? So making sure that you've done all of that diligence. I still obviously talk to a lot of references and referrals, and for me, I'll ask some of their clients that they already have today is like, so tell me a little bit about what's good with these individuals, right? And I want to hear what some of the good things are. But just like any property manager, and I've been doing this way too long,
It's not
they
perfect
also
life.
have they have weaknesses as well. And so
Correct.
what are those challenges? What are those weaknesses? And then understanding them, and am I comfortable with those weaknesses? Yes or no. And my rule of thumb is you want to definitely interview multiple different property managers, and you're working what you want to find some commonality, and more importantly, somebody that you feel is going to work well for you and your business, right? That communication, that engagement. So like I said, that's kind of their screening process to begin with. And more importantly is, even when we first get started, I try to make, our agreement. I actually don't lock in an agreement for a year right off the bat. Okay. So for me, it's kind of a trial period, no different than any employer. Let's test it out for 30 days or 60 days, and then we reassess it to a term after that. But I really want to see how they work and how it all goes. This way, you are um, testing it out, you're seeing to make sure it's the right fit. And as you have a property manager hired, my recommendation, anybody that's listening, um, is always have a backup just in case. So say it doesn't work out with that property manager, always have a
Okay.
backup. And
Yeah.
I can tell you right now, when I started 20 years ago, I do not use the same property manager as I did 20 years ago. And in fact, I've gone through multiple different property managers in almost every market
Hmm.
just because of things that happen, things that change. And
Correct.
that also is reflective of our realtors in some cases too. You know, I've got people don't want to be realtors anymore. They're just done, and or they are
Correct.
retired, or there's many different reasons. But my business is still growing and flourishing. But the more relationships and contacts you have, the better it's going to be for you. So
100%. The
yeah.
second one, I think, commercial real estate, because for me, this is basically, I think, the constant stream for anyone working like long distance. If you're looking for deals, who's gonna bring you the deal? I think the best bet will be your commercial real estate or realtor. So, what you did. So, if let's say Michael wanna buy in New Brunswick, and
Mhm.
so how you butter the things with a in new relationship with this realtor to little bit bump you to the half like top of his list, because you know that you're not alone. You're gonna have
Mhm.
a lot of investors. So how you make it done, and the first thing he's gonna do is contact you.
Yep, exactly. And for those that are getting started, this is probably going to be your biggest challenge because in the commercial multifamily world, there's not a big, they're not, it's a very small pool of true good commercial realtors. Okay. Let's be honest. There's
Correct.
very few of them. And even within that group, there's also even less in regards to really good quality ones. And so what you're trying to do is determine those individuals, who they are, identify who those people are. And my recommendation is you want to start building relationships with those people as quickly as you possibly can. The first initial phone call, they're not going to necessarily know who you are. But the more consistent that you become with that individual, connecting with them, building relationships with them, I always reference, hey, if I'm going out to Toronto, and I've just met this realtor through Zoom or through a phone call, I'm taking that person out for lunch.
Correct.
Okay. Absolutely.
Sending gifting cards from time to time.
All those things. It's all those relationship building things that you need to do. And the more you engage, the more you connect, the better you're going to be. And I want to be very clear. I think you should actually reach out with multiple commercial realtors, not just one,
Yeah.
because they all have different deals. They're all talking to multiple different owners. And still to this day, I've got multiple realtors that I work with. One realtor will bring me a deal, and this one won't bring me the same deal. They'll bring me a completely different deal. And
Correct.
sometimes it's these internal discussions and things that are happening that are being provided with off-market deals. And so the more you engage, the more you expand your network of realtors, the better it's going to be. Now, understand it's going to be really, really tough.
Especially on
So for
the
those,
new generations, someone wanna jump to new markets. Yeah, it's gonna be hard for him to start the
for sure.
relationship. Yeah.
Absolutely, and that goes even off market as well. Or say, for example, here I'm in Vancouver, and I got to build a relationship with in Moncton, hypothetically.
Correct.
We set up a Zoom call. We talk it out. We still engage, and we build kind of a friendship to the best of our ability. And trust me, I've built some amazing relationships back east. I've yet to meet any of them in most cases. I've just connected in this type of fashion.
Correct.
But guess what? This is the new world order, guys. And this is
Mm.
this is new reality that we still, even though I don't physically get a chance to shake their hand, we still can do business exactly in this fashion where we can just do it through a Zoom link. It works just as equally as well.
Yeah, you don't have to
Um,
live in Moncton to make a deal on Moncton. You don't have to live in Edmonton to make a deal. Like I understand. This is
Absolutely.
basically
Yeah,
what
absolutely.
stop many people to invest, because they think, okay, I live in New York, I cannot buy property in New York, so I'm gonna go to stock market. That's it.
Yeah,
But
totally.
this is
Yeah.
not the actual case here. The
No.
basically, for in my opinion, always the winning horse is the smaller communities, far from the fringe markets where, like San Francisco. Can you scale your business in San Francisco? I don't think so. Same in
Mhm.
New York. It's different animal here, and what you're doing basically is a correct way to scale your business. And the
Mhm.
only way to do it is to, as you said, make relation as much as you can through any
Yeah.
way of communication,
Yeah.
and try to have it just as you said, from time to time, to have a constant relationship and
Yeah.
sending gifts, show interest on the team member service, and going from there. Correct?
Yeah, like yeah, absolutely. It's all those things, and like social media is a big player too, as well. Obviously, you're following them, provide some content, comments, and congratulations, and all those things like that. And then in the other world as well, is for those that are looking for those good commercial realtors and people that they've connected with, don't discount making connections and networking with other investors in the community. Like, so for example, Mohammed, I'll say, hey, Mohammed, we just built a relationship. We're saying hello, nice to see you. Listen, I need a good commercial realtor. Do you have any recommendations? And maybe you do have a great relationship with your commercial realtor that you're willing to connect us. But by you connecting us together and you've got a good relationship, that should actually fall into a possible good relationship with that individual as well. So don't ever discount references or referrals from other people, because I'll tell you right now, even myself, I give referrals constantly of my investment team to other people that are looking for it, because I want to support my property managers, my realtors, all these individuals as well, because I want them to help grow their business. And if I can give them some leads to help facilitate that, fantastic. But I know they'll be very thankful that I did that, and will hopefully continue to provide me with those
100%.
opportunities. So it's a win-win scenario, and I think that's what we have to treat it as. So
More networking, basically. You have to have more networking.
absolutely.
Yeah.
Absolutely.
Yeah.
Absolutely. Yeah.
So I want to jump to your biggest deal so far. So how you met the
Hmm.
sponsor, or how you got the deal, basically.
Biggest deal, I guess, is it biggest project or just biggest profitability?
Biggest project, like how many units was, which market,
Hmm.
how you find like an actual, uh, not a gap, like an actual opportunity to make cash
Hmm.
flow, basically, on this deal.
The biggest opportunity. Well, okay. Um, I've got lots of different types of projects, but I guess I'm just trying to think if the best way to reference it is a purchase and a close. Because we had some recent projects that might be from a profitable side, that might be a better example, but they're
Yeah,
actually smaller projects, believe it or not, which is shocking, to be honest with you. So maybe I'll share one of these ones real quickly,
sure,
because
sure.
this one just happened, and it was just got it done. So
100%.
um, one of the properties was, for our segment that we like for our property acquisitions, is normally kind of between the 15 to 35 unit building. We just find this kind of sweet spot there where it's still kind of mom and pop seller. We're not competing with the REITs and the pension funds and all these other individuals that are bigger organizations.
Mm.
And because they're 15 units and higher, we're also not competing against a lot of the people who are just getting started into multifamily. So, and there's a
Correct.
higher amount of money and stuff like that that kind of comes along with this, right? So, um, one property did pop up, which is just a simple 12 unit building, which is under what our number was. And we're just like, okay, it's 12, but the suite mix was fantastic. It was 8 2 bedrooms with 4 1 bedrooms, and it was in a great location. All the units were above ground, which was fantastic. And this was based in Moncton, in one of our Atlantic Canada properties. And
Okay.
so we did well. But the one thing that we noticed was the rents were significantly low, like really, really low. We had one tenant in there, one of the 2 bedrooms, paying $650 a month for a 2 bedroom unit, which was also including utility. So 650 for a 2 bedroom, including utilities. The
Really?
rent in that market, yeah, the actual rent in that market was around $1,100 a month,
Correct. Yeah.
not including utilities, right? So we saw this and we're like, okay, this, and the entire building was very similar in this fashion. Rents were way too low. Utilities were included, and we just kind of like, okay, this is crazy. And so we saw an opportunity where we were able to transfer all the utilities over to their name, and the rents just needed to go up. So we actually just we bought the property. I think it was for like $950,000 in July of 2021, right?
Yeah, just
So July
recently.
20, Yeah, so
Yeah.
just recently, right? And so with that being said, very similar. What's the opportunity? The property was cash flowing from day one. So that was good. We're happy with that, but it was what the future opportunity was going to
Correct.
be. And so we saw a lucrative amount of cash that was going to be able to be done. So we took it over within about 30 days. We started to kind of communicate with the tenants what we were planning on doing, working with some of these individuals accordingly as well. And then we raised a lot of the rents up to what the market needed to be. We had a tiny bit of turnover, very little. So we had to address that. There was a few units that needed a little bit of renovation, not much, but a little bit of work that needed to be done. But then what we saw was the market was really starting to take off. So again, we saw the appreciation that was happening. We saw migration happening. Demand for rental started to go up. But really, we didn't really worry about what was happening in the market because we saw the opportunity within the building in itself. It was just so undervalued from the very beginning.
Correct.
So we decided to exit that property shortly after. And so we actually put it up for sale in December. And
Wow.
we had it in multiple offers. And we just closed on this about less than 30 days ago. So we just finished the completion of the sale. So we bought this one for like $950,000 in July of 2021. And we just sold it for $1.515 million in less than like 7, 8 months, right? So it wasn't that long.
Without adding value. It was like a just buy and hold.
Very little, very little.
Okay.
But this is exactly what we try to find is like properties that have just been, tired or in a lot of cases I've seen lately too, is you've got apartment buildings that are maybe owned second generation. So their father purchased this property. Now that's inherited to their son or their daughter. But here's the thing, there's no mortgage on this property at all. This is exactly this example here. No mortgage, even only charging $650 a month for this unit
Making
to
it cash
this
flow.
individual. It was making lots of money for these people. So they just like, I don't like to see turnover in my building. The average tenure
Hmm.
of this building, average tenure was 18 years. They were tenanted, the average was 18 years that they've lived in there. This one person was there for 30 years living in this building. And you know what? The owners were happy. The ones that were selling, the sellers of this property when we bought it, they were happy because this thing's just generating lots of income. There's no turnover in their building whatsoever because it's just long-term tenants. So there was really not a lot of motivation to grow that business or treat it more of a business per se. And you know what? You'll be shocked. There's lots of owners that are in that same position out there. You just got to go out and hunt for those types of opportunities. And so just be aware of it, be cautious of it, and see what you can actually do. But in this scenario, we really didn't have to do much work. We just saw an opportunity like this. And again, it's not $1 million deal. It's a little over $500,000 deal in a 6 to 7 month window with very
600,000.
little bit of work that needed to be done, right? So it's just
Correct.
like we like looking at projects like that, and those ones we call just little unicorns that are out there. But trust me, they're out there. They're definitely out there. So
So, but I see that you're flexible because, as you said, you focus on more on central Canada, but moving to again to Atlantic, I think the main challenge for me will be the rent control issue because
yes,
if you want to do an actual added value, then you need to eventually kick
yes,
out tenants to add the value and do the refinance. But in this particular case, your whole strategy was not to add value, as you said, minimum maybe on corridors and general areas, but you saw the actual potential to make money on short term, correct?
short term, yeah. And so we were very fortunate that these rent policies that were put in just a few weeks ago weren't in place when we literally sold. So we were lucky. I'm not saying it's
Correct.
because of I was the most brilliant investor in the world. No, I was
Correct.
lucky, right? We just, but one thing I will pat myself on the back is some of these rent controls were starting to be put into place in Halifax in
Correct.
advance. And so with that being said, it was just kind of your spider senses were tingling, and that was actually one of the main reasons that we decided to sell the property and not keep it, actually, because I don't like rent policies or rent controls in my markets of choice, to be really honest with
Not
you.
investment friendly, basically. That's why many people
No,
going to Saskatchewan and Alberta because it's still open. You can
very
rent,
much
you can raise the rent and you can add the value. You can do your own thing. But on Ontario, you have to buy out
harder.
the tenant to able to
Yeah,
do your strategy.
yeah. You do your cash for keys, and like I said, there's always a
Yeah,
way. It just might cost you a little bit more. You know what I'm
correct.
saying, right?
Part
And
part of the
so
project. Yeah,
yeah, and so, but that's the thing. When you start to look at that right now, like our individuals, and this is not a shot for our investors out there. It's just guys got to be just creative a little bit, unfortunately, right?
correct.
But here's one of the struggles that you're going to be facing out there is, let's just say we just bought this building, okay? We saw that these rents were $650 a month when it's supposed to be 1,100. The only thing I really can do is give them a rent increase of the 3.7, 3.8% or 3.9% and try to push them out. But no one, they're not going to leave because they're like, it's still really, really cheap. Even if I gave them an
It's a
extra
steal, basically.
$1,000,
Yeah,
yeah, yeah.
yeah.
I say, hey, listen, I'll give you cash for keys. And I'll give you $1,000 to leave. They're not going to leave
No,
because it doesn't make any sense. They know they're getting an amazing rent deal, and that $1,000 will get blown away really fast when they go to try to find their new property as well. So,
correct.
like I said, that's one of the challenges. You have to kind of just know what's going on. What are some of the opportunities, and pay attention to what's going on in multiple different facets, not just economic, but the biggest thing that's happening is the political environment that's changing things a lot in the last couple of years. So
100%.
yeah.
My next question will be business wise, what is your business strategy basically? It's like you go on a bare trust agreement, a GPLP, a regular partnership, you're doing it alone. So you like to raise capital, or is this basically you and your closer contact only?
Yeah, like for me, I do raise capital and we're just a basic JV partnership in most cases as well. We do private lending as well, or we'll work with private lenders as well.
Hmm,
The individuals that we've worked with for our money partners are individuals that we've worked with for years and years and years. They have become investors of ours, where we just, again, in a scenario like we just shared here, most of those individuals will just say, Mike, thanks for the money. Really appreciate that. Where's the next place to park it? And that's really where investors want to go, is you've got a good pool of investors that you're working with and you have success, and then you can take that capital and repurpose it yet again in those multiple different projects as well, right?
so you
um,
rely on partnership. You mean that they are active investors, or you prefer you to be the G? So you GPLPs then,
Will be
general partner.
GPLP.
Yeah, yeah,
Exactly. Yeah,
yeah. Correct.
exactly that. So it's just like for us, we're the working partner. These guys, for the most part, are just the silent partners in a lot of cases.
Correct.
And there's not a lot of involvement. And these people really have entrusted us in regards to ensuring that we're going to do what we've projected in our pro formas as part of our analysis. So like I said, they are very, very hands-on, where we use our experience, knowledge, our investment teams to making sure we fulfill kind of our commitments that we're working with our investment partners with. So
Okay, so the next one will be for people out there listening, they want to raise capital. Can you share maybe like how much time to took you to raise capital on a deal? Is before or after the deal, or based on previous relationships or so? I
yeah,
think this is always one of the question to anyone want to raise money. Do I have to start
yes,
right before having the deal, or when I have the deal? Like timeline, what you do?
great question. Thank you for asking that one, because it's something that I actually teach in my courses too as well. It's like
Sure.
the money should always come first from my perspective, always,
Mm,
because you know if you don't have money, I don't know why you're going out looking for deals. It just doesn't really make sense. And there's that old saying which drives me crazy. And again, for those that say it, that's totally fine. I'm just maybe in a different belief to this. Is for those that say you find the deal and the money will come. And I've heard this saying multiple times. But
bigger pockets.
the desperation that you are going to be under to try to raise that capital is not going to help ensure that you find the right partners for your deals.
Correct.
And so there's kind of a saying that there's what I kind of reference is, it's like a marriage, truly. Okay.
Correct.
And when you are looking for a money partner, the interview process should go both ways. And so for me, when I look at a money partner, my question as the real estate expert is, can I work with somebody like Mohammed as my money partner, as part of my investment team?
Makes
Do
sense.
I feel good working with Mohammed? What's his personality like? Is his goal similar to mine? And so I want to know that in advance of putting that person into a deal, and not just throw that person into a deal. I want to take the time to get a chance to know who you are, what your goals are, what you're trying to accomplish, and more importantly is what's the type of projects that would be the best suited for you, and can I fulfill the objectives you're looking to accomplish. By taking the time and energy to do that in advance of a deal, it's going to make the process so much easier for you. So when a deal actually comes, you can say, Mohammed, I've got this opportunity. And remember, we were talking about your investment goals. This is how it's going to fulfill that. Now it's a much more seamless process versus you having a deal and now you're panicking to try to source that money. And guess what? You may partner with the wrong people because you're desperate to raise that cash. So I use the analogy of this. It's like going to Costco, but purposely you have left your wallet at home. You know that. But you continue to walk around Costco, filling the cart up all over the place, spend an hour, hour and a half, if it's me and my wife, maybe 2 hours. And we walk around the entire store at Costco. And then we get up to the cashier.
And then
And now we leave.
no wallet.
And now we walk home.
Correct.
It's a waste of time. And that's my true belief when it comes to the same principles of raising capital.
Especially the credibility with your realtor who brought you the deal. So if he
Everybody.
if he give you the deal and then you screw up because you didn't able to close because you don't have enough money, then he's not gonna bring you any more deals.
Not at all. And I think that's if there's one message that maybe people are listening, for those that are listening about the capital raise side, I'll give you a little bit of advice. Less time on looking at deals, more time on raising capital. And when I work with my students, I always kind of say 80-20 rule, and then it flips. So you go 80% of your time should be trying to raise money first, then maybe 10% or even 20% looking at deals. When you've started raising money, and say, for example, you've raised $500,000, now we swap. It's 80% looking at deals, 20% raising money. But for those that are looking to raise money, you should never stop raising money, ever, 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 because you might have enough money for that one particular project, but when you go to work on the next one, you want to keep that momentum going of that capital raise side. So take the time. If you don't know how to raise money, take the time to learn how to raise money to begin with. And then secondly, that's really where the focus needs to be versus you looking at deals. And like I said, I'm a believer, and this is what I preach, always have the money first before you look at the deals, because exactly like you said, Mohammed, it's a small industry, and you don't want to build a bad reputation with your new team members that you've worked so hard. We just talked about this. You've built these relationships. You've taken them out for lunch. Do you want to ruin that relationship right now? So take the time to have that money ready to go. So when that new relationship of a realtor has provided you a deal, you can do something about it.
So you're focusing on connections. Maybe talk some about some of rejection you had before for raising money. Because this
Rejection.
because this is part of the game anyway. You're not gonna find
Totally.
maybe 5% is gonna accept and 95 not.
I find it the other way around.
Really?
Yeah.
Wow.
Yeah, I really do. And that 5% in more cases than not is actually me turning them down. So it's like, because it's just about finding the right fit. But the whole approach to this is, when you're learning how to raise money, and I see a lot of people do it wrong all the time, is you are needing to build trust and credibility in yourself. Okay. So for example, Mohammed is like, if Mohammed is the money partner, and if I'm the money partner and you're the real estate expert and you're trying to raise money from me, my initial thinking is, if I give Mohammed $100,000, my concern is he going to be heading to Belize with my $100,000, right? And that's really what I'm trying to determine. He may say, I've got something that's a 50% return on his investment. He may have an opportunity that truly pays that out.
Correct.
But I don't know that I don't trust you yet, right? That's the key.
Building
And so
trust.
when yeah, so the key is to raising capital is you got to have that commonality, that relationship. You got to build trust and comfort.
100%.
And that's why I'm saying is you want to be in that rushing position because you've got a deal to raise money. You want to say, hey, can I work with this person from both ends? Can I trust this person with their money? Once they've trusted you and they feel, hey, you know what? I feel good with Mohammed. I really do. I feel great. And so with that being said, you know what? It doesn't even matter what deal Mohammed brings me. Doesn't. Could be in Tuktoyaktuk for all it matters. And I'm not knocking Tuktoyaktuk because I don't know if it's good or not. But say it is.
Hmm.
Because I trust Mohammed 100%,
Building the
here's my
relationship.
money.
Yeah, building
That's
the
the
relationship.
key, right? And so, if there was a mistake that I learned, and for those that are watching and listening, that was one of my early mistakes. I pitched the deal.
Hmm.
I pitched it. Here's the opportunity, Mohammed. It pays 20% return. But I didn't take the time to know and build that relationship up
Correct.
front. And that's really the most important piece. And so even myself, like, you see a lot of people on social media, on Facebook or whatever, and they're pitching their deals, 20% return, da 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 da. And then everybody responds accordingly. I'm going to tell you right now, the small percentage of those actually closing is very, very low.
The
And the
commitment. Yeah.
yeah, the commitment, because you know what? It's anybody that's got any real money, they're going to get a chance to know who you are and what you're all about first and foremost before they give you any bucks. And it isn't the deal. It's, can I trust Mohammed? And I'm sure I can
Correct.
trust Mohammed with $100,000
From now
because
on.
I know he's not going to go to Belize or wherever he's going to go.
Correct.
But truthfully, that's the name of the game when you're raising capital, is
Correct.
take the time to learn. And I made that same mistake a long time ago, was trying to pitch the deal. And it was actually my wife that told me because I was having such a hard time trying to raise money at first. And she's like, just pitch me. And I did.
Hmm.
And she figured it out in 5 minutes. And she's just like, when are you going to talk about me and learn about one of my investment goals? You're just talking about yourself
Correct.
and this deal. And she goes, you know what? We need to have a relationship here. We need to understand it. And that was actually her that told that to me. And it really came back as it really flipped my script in regards to the way I approached it.
The strategy
And
itself.
now,
Yeah.
yeah. And so now I just had more confidence in raising the capital. So
Also, you have to have aligned goals. Like you have to, as you said, you have to listen to what he's looking for. What is his
absolutely.
actual goal in short time period and long time period? Correct.
Absolutely. Yeah.
My next one will be what would you say is your superpower or strength?
Superpower strengths. Well, that's a tough one.
Or what is
Super,
your wife saying, maybe?
oh, that might be different comments. But I think superpower strength. I'm not really sure if I really. I guess it can be multiple different ways, and I guess for me, um, is kind of my ability to build relationships with people. I think is key. Like, and that's been instrumental in my business. And the old saying is not what you know, it's who you know. And I've taken the time to really build a lot of connections and networking, and taking the time to meet all sorts of different people. In my business too, is do my best to support people to any if they've got questions. If I get comments and emails and messages, and then Mike, I got a challenge or a problem or something. Can we just talk it out? Or I'm happy to help. Like, I'm truly, and that goes to anybody that's listening as well. Like, truly, the more you give, the more you get. And it's not to have an expectation like that, but I have been so fulfilled by just everybody's kind of comments and things like that I've been able to help support. But more importantly, there's nothing more rewarding where I hear somebody just buying their first multi-family property and they're just saying thank you for that little nugget. I'm like, happy to help in any way, because it makes you feel good. It's a small community, small industry. Let's all help each other to be successful. And so for me, I've really enjoyed my journey. I built amazing relationships and connected with people literally all over the world, which has been fantastic. And so, I would say that would be one of my strengths, is just the ability to build those relationships and connecting with people. And like I said, for me, I've always enjoyed supporting and helping individuals as well as a contribution back to the community.
So you, as you said, you are already mentor to many investors already. But if we're asking who's influential mentor in your real estate career so far, like Grant Cardone,
Mm,
Brandon, bigger pockets. Like, who's your actual role model now? Who's like you're following?
That I'm following right now. Um, You know what? I don't really have, I wouldn't say they'd be role models as they are just, I like to watch what people do, to be really honest with you.
Correct.
Lots, right? So you got Mark Loeffler, I've always enjoyed watching, Russell Westcott's and other individuals that I always like to watch.
Mm.
I do watch Grant Cardone, and lots of other different, not so much even real estate
Hmm.
entrepreneurs, but more business entrepreneurs as well,
Gary
right?
V.
Yeah, Gary V. I
Yeah.
love Gary V. But for me, I just like the fascination of the business aspect of things. And it's not that drives me into the real estate side as it is just seeing what people are constantly doing. And obviously I'm a marketing guy too. And so I like watching how people do their marketing and those things that are very, very unique in the industry, right? So multiple different pieces, but I guess my role model, which might be a little bit different, is actually my father. And so for me,
Good answer.
he was my biggest role model, actually, to be honest with you, and just watching what he did. And he actually did his land development. And that was my, part of the inspiration that got me going a little bit too. And so, if I've got an issue or a challenge or something like that that pops up, I can always know that I can go to him to ask any questions. And sometimes it's just simple common sense answers that you're needing. And so that's who I would say is a great mentor for me. So
Okay. Final
yeah,
question.
yeah.
Can you tell me about your favorite book and lately which book did you read that grabbed your attention?
Definitely Atomic Habits is the one that I'm reading right now. Fantastic book
Hmm.
for those that are looking for a great book, but it really is just talking about creating positive habits, and I'm making sure that you set up a system in place to help kind of grow and expand and changing new habit structures and getting away from some older habits. One of my favorite books, to be honest, was well, I've got a few, but The One Thing was another book as well. With I think it was Simon Sinek that wrote that one. But again, very similar kind of mindset is what is that one thing, that one habit that you're trying to stay focused with. In this day and age right now, where there's so much noise and so much stuff out there, sometimes our brains can kind of just think about too many things, too many distractions, and it just kind of brings you back to staying focused. And it's not that I lack focus, but I really enjoy some of the simplicities of other people's systems that have keep you following a path for yourself, not just in your business, personally, and also family as well. So I've always enjoyed that type of reading. So
I hope that you love the show today. Thank you so much for doing this. And my final question would be where our listener can follow your success. Like if someone wanna follow you, where we can find you.
absolutely. Well, we've just launched our brand spanking new website, just out. So we
Good
run a
news.
community called the Savvy Investor or Savvy Investor on our Facebook page. But if you go to our website, thesavvyinvestor.ca, you will see links to all of our communities, our YouTube channel, different content. There's lots of free resources for people that are just getting started investing in real estate, all sorts of stuff. So if you go on that site, thesavvyinvestor.ca, lots of information. So yeah, hope to see you guys there.
Thanks a lot. Thanks a lot for your time today, and we're really happy to have you today in the show. Thanks a
Thanks,
lot.
Mohammed. Appreciate the opportunity. Bye
Thank
now.
you.